Good evening, it's Adil Fazal, market analyst at CFDs.com, bringing a review of the European markets, the FTSE 100, DAX, CAC, and the Euro stocks. Okay, let's sum up the actual trading action today. But before I do, be sure to visit CFDs.com. This video is being brought to you by CFDS Education, so certainly visit CFDs.com for your trading needs and your ability to open up a thread betting and CFD account to trade the markets. Now, with regards to the educational site, always visit the educational site too, www.cfds.education, to learn more. Okay, summary of the events today, especially with regards to European markets and exactly how the day transpired. Okay, so the FTSE 100 first of all. Okay, so we started the day off with the Asian markets down overnight. You had the Shanghai down, the Nikkei down. So we had a risk-off tone in the markets, and that was primarily led by the weaker inflation data out of China. Although it should be viewed as a simulatory measure in terms of lower inflation means that obviously there is more room to ease in terms of the stock market. So therefore you are looking at the ability to ease. In terms of weak or looser monetary policy and obviously fiscal policy as well can be utilized when there is a lack of inflation, especially monetary policy, and a potential there for QE. Okay, and any stimulus talk basically is generally considered positive for the stock market. So therefore we're expecting the markets to certainly move higher. But the interpretation overnight in Asia was certainly negative, and that fed through into the European markets too. Okay, and as you can see, the FTSE 100 obviously finished down for the day. We were down 70 points in the FTSE, minus 1%, basically on all European stocks. The DAX was down by more than 1%. The CAC was down by 0.7%. So that's basically what transpired. Asian markets weaker overnight, obviously filtered through. And we had the S&P obviously hold the key resistance zone at 2020, and now we're currently around the 2000 level, just below. Okay, let's try and look at the fundamentals in terms of Europe now, given the fact that the Chinese data obviously created concerns with regards to global growth, and China obviously is the leader of that global growth. Okay. In terms of the actual FTSE itself, or the UK markets, obviously we had wage growth data certainly coming in below expectations and not coming out in line. So certainly a risk-off factor there in terms of the markets interpreting the events thus far. Okay, so we had a risk-off scenario there. Okay, so you had obviously inflation data in terms of the BOE, in terms of the BOE, in terms of them obviously conducting or going ahead with interest rate cuts. Obviously that certainly puts that on a back burner and pushes out high expectations, just like the Fed as well. Okay, so weaker wage growth generally is considered to be a lack of consumption. Okay, and as we all know, 60-70% of GDP is based on consumption patterns, so that certainly is a negative factor as well, okay, in terms of interpreting the market. But on the other hand, it is considered to be dovish, and therefore obviously that does help the FTSE certainly rally and propel higher. And given the fact that you had the weaker Chinese inflation data overnight, which means more stimulus, obviously that helps the FTSE 100 to propel higher too. Okay, so that's basically how we're interpreting the actual market events. In terms of European data, from what I can recollect today, we did have European data come out weaker than expected. We had industrial production out the European markets come out worse than expected at 0.9%, which was expected at 1.8%. We did have French inflation data as well come out in line. Spanish inflation, nothing of any importance. We did have the Italian CPI come out worse than expected, so that certainly triggered the QE move, or certainly a bias towards QE. Okay, so that's basically a summary of the events in the European markets at present. And again, like I said, the markets were underpinned by the fact that China would potentially go ahead with QE, and there has been talk ever since with regards to QE in China, and that's obviously lifted the price of gold, and copper was certainly resilient today as well. Okay, Right, so the technical picture now, given the fact that we've understood fundamentals. So let's start off with the FTSE 100 first of all. Okay, so the FTSE 100 continues its decline, given the fact that obviously China and obviously the Nikkei was certainly weak overnight. And given the fact that we are testing previous resistance equals support now, so this is going to be quite crucial. This zone between 6280 and 6250 is going to be absolutely pivotal. If we fail to hold there, and obviously Asian markets will dictate overnight. Just bringing up a chart of the emerging markets. We did have a doji overnight on the emerging markets, so that's certainly interesting. In terms of the CRBQ, we are coming into potential gap fill below. In terms of the Nikkei, we have obviously flushed lower. There is an unfilled gap below that needs to close, which we are looking at this level here, 17,700 zone. Okay, so let's have a look here. And you're looking at a potential gap. Okay, so yes, you are looking at this potential gap level here, and we are looking at potential support in order for the markets to certainly bounce off. Okay, so that's our zone at present. Okay, and the Shanghai now, again, you are holding previous resistance equals support, but you do have a potential possibility, given the fact that we've got now a QE now back into the frame, then this certainly has the ability to propel higher. So again, Asian markets will be very important overnight. Going back to the FTSE 100 now, so again, that key pivotal zone on the daily chart, again, watch out for it. 6250, 6280, again, if that zone holds, the FTSE certainly will propel higher. The 60-minute chart of the FTSE 100 now, we had this H&S formation. We did actually negate it to a large extent because the markets did go back and trade above it. So for now, I am going to ignore the FTSE 60-minute H&S pattern. Okay, so given the fact that we did trade above it slightly, so again, although one has to look at it, given the fact that we did have several, one BOE member certainly talk about certainly talk about QE back on the agenda and potential interest rate cuts, etc. was very, very dovish. And given the fact that we had wage growth, inflation certainly lacking today as well, and given the fact that we've had inflation data recently out of the UK certainly worse than expected, especially yesterday's PPI, CPI, RPI. Again, it does put the actual BOE on the back foot. And given the fact that we have got lack of growth, and also given the weaker US data today again, basically means that central banks will remain dovish and for longer. Okay, and that certainly supports and helps equities. 60-minute chart, lower lows, lower highs. So again, that must be respected. We are in a downtrend until obviously stated otherwise. Innocent until proven guilty. A 10-minute chart, you have a double bottom, certainly double bottom support at 6270. So again, Asian markets will be crucial, and they will dictate exactly which way the markets are going to move. The resistance at 6315 certainly held pretty impressively, and we were oscillating all day. So 6270 support in the interim on the downside. Obviously, if the Asian markets sell off quite substantially, then you are going to gap down. Support seen at 6250, and if that fails, then you are looking at a zone just below in terms of support for the FTSE 100. So very, very crucial and very, very important. Okay, that's basically where we stand in terms of the 10-minute chart. The 5-minute chart doesn't actually show us anything at present. Again, it's all about a support zone. Now we can cross-reference the FTSE 100 with our volatility index, and as you can see, we have been rising on the volatility index. Nothing substantial though. That's one of my main concerns. Nothing substantial. Every time we attempt to move higher, it gets sold quite with some ferocity. So again, this 60-minute breakout is circumspect to a large extent, and the 10-minute certainly is coming into resistance as well. So we'll see whether or not we can take out that pivot higher, 18.6, but it seems unlikely given the dovish rhetoric and the dovish backdrop, given the weaker inflation data and weaker wage growth. And that should certainly remain equity market supportive in terms of the FTSE 100. Looking at the FTSE 250 now, going to a daily chart of the FTSE 250, we have pulled back, certainly agree in terms of the pullback itself, but you are coming into a potential horizontal support zone. So again, it's going to be interesting to see how this transpires. Okay, now the actual commodities now itself, the oil price, we did have a potential breakout on the price of oil. We have a downward sloping wedge pattern, so this needs to be observed very carefully, and we shall see how this market certainly transpires as well. Okay, and the 4-hour chart, certainly a potential bullish breakout. 60-minute chart, we are potentially coming into support. Okay, and this is going to be quite crucial into the especially with regards to potential next move of the price of oil. Okay, and now we have a double top resistance, so that certainly needs to be respected. Daily chart, looking at the pivot high to pivot low, you are coming into the fib 75% support now. So if this oil certainly chart needs to break out, it certainly needs to get moving now. Okay, now given the fact that you have geopolitics in Syria, certainly that will be the main driving force. Okay, also any comments from OPEC, also with regards to QE, etc. in China, and also BOE and the Fed, and also Mr. Draghi is due to be speaking this week, or I think there is a announcement from Mr. Draghi that's going to be very interesting, especially with regards to the euro propelling higher. He will certainly attempt to jawbone the euro and force the euro down. So that's going to be very interesting this week in terms of the euro USD, and that should obviously provide a stimulatory factor to the European markets, and they have been quite stellar. The DAX HNS, which I'll discuss shortly, failed to play out, so therefore the bulls were certainly strong. We do have Mr. ECB's Constantio speaking during the Asian time zone today, so that should be interesting. See if he can jawbone the euro and send European equities higher. Okay, going back to the FTSE charts again now. Let's go to the FTSE Euro Top 100. You can see there FTSE All Share again coming into previous resistance equals support. So key zone for the FTSE 100. Okay, have a quick look at the actual main drivers of the FTSE 100. So the banking stocks are certainly given regards to the earnings recently. We have obviously come off quite substantially. Look, given the fact that we have put in a double bottom on the banking stocks, you have come back to around the 50% fib support. So again, I think that will be quite crucial in terms of the next move on the FTSE, if we can hold this support though. Excuse me. Okay, the mining sector, we have come back. We put in a doji candle today, so again, that's a zone that we're going to be watching. The 60-minute chart, certainly a zone again that we watch. Okay, so support zone needs to be observed here. Okay. And again, it's going to be interesting as to the next move. We do have this HNS formation, so that is a slight cause for concern in terms of the FTSE itself, of it whether or not it can hold that 50 zone, 6250, 6280 zone, and that will be important as well. Okay, the actual oil and gas sector again. Obviously, we've pulled back 3 days in a row now, so 3-bar pullback is certainly over. And whether or not we can sustain this move higher based on the chart of oil, which I've shown you, which is obviously coming into support, is going to be very interesting as to what happens in the next 24 to 48 hours. Now, there is one more chart with regards to the FTSE that I need to show you, as always, is the dollar index. And the dollar index certainly is coming into support, as you can see here. And given the fact that it's taken out the 200 MA, it's slightly a cause for concern. That's your last bastion of support there. Okay, if that fails to hold, then obviously the oil, the chart of dollar will certainly propel lower. Now, given the actual economic data thus far, and given the fact that we've taken out the 200 MA as well, it'll be very surprising for me to see this this level hold unless there's some geopolitical event or socioeconomic concerns, etc. The dollar index certainly is going to be propelled and forced lower, potentially down to the 11,800 level, but even potentially lower down to the 11,750 level, given the fundamentals at play. Okay, if that occurs, then that will obviously send commodities higher, and the FTSE 100 will certainly propel higher as well. So again, Chinese markets are going to be very, very important. Okay, the European markets now. The German DAX I'll start off with, given the fact that it's a leader in Europe. Let's see exactly where this wants to turn. The French, or should we say the German DAX, if I can just locate that here. Okay, I need to bring up the European markets now, 1 second. EU market indices. Here we go. Okay. So EU market indices. So we need the German DAX to start off with. Let's see how the German DAX is positioned. Okie dokie. There we go. Okay, so the daily chart of the German DAX itself, doji candle again, slight 3-bar pullback. Given the fact that we've had this move thus far, you have an unfilled gap above that potentially needs to be closed. You have this H&S formation, which is my concern, so therefore the bearish aspect of it certainly is into play. We did have this initial H&S which was negated today, given the fact that we retested a neckline, but for now that certainly seems to be a zone or a potential formation that needs to be watched very carefully. Obviously if the German DAX plays out in terms of the IHS, and that means that the Nasdaq is obviously due for a reversal on the downside. So given the fact that my understanding thus far of the Nasdaq, my analysis thus far of the Nasdaq, I don't expect the Nasdaq to turn down at any time soon. I expect the Nasdaq to propel higher and certainly go and turn bullish. So given the fact that the German commentary today, and given the fact that we had the Nikkei down, the Shanghai down, still the German DAX failed to break lower. So that's certainly something to consider. And given the fact that we've had this dovish data out of the US and basically confirming no more rate hikes, etc., and the Fed is obviously forced in a corner given the emerging market crisis and the China crisis, etc., etc., it's going to be very, very hard for the Fed to justify any potential rate hike. So again, that would obviously be equity market supportive, and therefore you're looking at a potential market that will have a possibility of obviously going higher. Well, not possibility, but a great probability of going higher. So if you take all those things into the equation, then you certainly it's very hard to justify the actual markets collapsing and obviously reversing as well. So those are two factors certainly to take into consideration in terms of the market itself. Okay, right. So German DAX on a 60-minute chart. Beware. Again, as traders, we have to be obviously open to all probabilities and all eventualities. So therefore, this market could go higher or it could go lower. Okay, if it goes lower, the higher probability given the technical pattern. But again, you take technicals with fundamentals, and at present my analysis states that this, well, my personal trades at present are long Nasdaq. I'll confirm that my inherent bias based on my analysis, and currently up 11 points as we speak. I actually went in long at 4339. It's currently 4350. So hunky-dory so far. Okay, currently 223 points for the week. So certainly good trading thus far. Thank you very much. Very grateful, especially after the last few weeks of turbulence. Okay, so 16-minute chart, as you can see here, H&S formation. Okay, 10-minute chart on the German DAX. We're holding this horizontal support line ever since we closed this gap here at 9900. Now, bear in mind, folks, even with Shanghai down, Nikkei down, okay, weaker inflation data, weaker EU data, weaker UK data, and yet the markets, or the German DAX, managed to go up and close the gap at 10,030 and then obviously reverse sharply. So you have to respect that, okay? In such a bearish environment, the German DAX held its own and was certainly very, very bullish, even with a rising euro, okay? Even with a rising, currently euro is testing 1.1480, so even with a rising euro, it certainly held its own. Now, given the fact that the euro were to, or if the euro were to collapse and move lower, then what do you think would happen? Okay, then you would expect the actual DAX to start to rally. Okay, so very, very impressive strength and performance in the DAX today. And that's one of the reasons why I was forced to close my Euro stock short for plus 15, because I had to respect that. Okay, right, let's just cross-reference that with the MDAX now. So if I just bring up the chart, the MDAX, okay, MDAX. We've obviously flushed on the MDAX. Now, my only concern with regards to the MDAX is that we do have an unfilled gap that needs to close below. It would have been helpful if that gap had closed, and technically then I could have obviously turned bullish. But for now, let's see what tomorrow brings, and let's see how the market reacts. Okay, so again, zooming into a 60-minute chart of the MDAX, we certainly have held at 200 MA, and like I said, you've got the unfilled gap below. So given the fact that we did hold on, we didn't make a new lower low, it has to be respected thus far. On a 10-minute chart, certainly a very strong case for an inverted head and shoulders formation. As you can see here, this is your left shoulder on the MDAX, right, head is gone in, and obviously right shoulder, then we propel higher. Okay, so certainly be aware to that. The actual tech all share performance index, given the fact that we had the flush on the Nasdaq, you are going to expect a potential gap lower, but again we are going to come into that 200 MA on the actual tech share performing index, and therefore you are looking at a potential bullish scenario from that support zone onwards. Okay, and that certainly needs to be respected in the interim. Okay, so the French CAC now. Let's see exactly where this is positioned. Looking at a daily chart on the French CAC, we did put a bottoming tail, potential doji in, so certainly a good sign on the daily chart, given the fact that we've had almost a three bar pullback or 3-day pullback on the French CAC, and certainly is showing strength compared to the rest of the indices. Again, 60-minute chart, we did not put in a lower low, so we are holding our own here at present. And that's, again, like I said, certainly needs to be respected. We are holding horizontal support at 4,590, although you need to be aware that we do have a gap at 4,460. Oh, we need to remain open to that. Okay, 10-minute chart of the French CAC. You are looking at the fact that you did not make a lower low. Again, that needs to be respected, especially with the Shanghai down. Very impressive, given the fact that Nikkei was down. There certainly is either the market has factored all the bearish news, or there is some bullish news to come, and that's why this market is certainly remaining bullish on at this current juncture. Now, looking at the CAC volatility index, this is something that I always observe. Looking at a 10-minute chart of the CAC volatility index, you are into resistance. 60-minute chart, again, you do have this inverted head and shoulders formation, so that's on the assumption that the euro will continue to rise. So again, that's debatable. Okay, again, very, very debatable. The CAC 40, as you can see, we've covered that now. The actual Euro stocks, before I finish, Euro stocks volatility index, we did put in a doji. We've had a slight bounce. 60-minute chart, inverted head and shoulders formation has failed thus far. So for now, one needs to remain cautious with regards to the market itself, because we could continue to go lower on the volatility index given the dovish market commentary or dovish data that's coming out at present, and also given the fact that commodities are into support. Okay, the actual Euro stocks now, just to finish off, and this has been, this is the S&P 350. No, this is the Euro stocks. Okay, so the Euro stocks in the daily chart start off with, first of all, obviously we've had that 3-bar pullback on the daily. In the 60-minute chart, you do have this support zone here. The fact that we didn't make a lower low is certainly bullish. I did expect this bear flag to play out, and it hasn't so far, even with the US markets flushing. And you have this support at 3,190 and then 3,180. So those two support zones certainly look to be solid and do look as if they are holding. If we break the 3,180 level, then the bear flag obviously is in play and the markets are looking to move lower. As I speak, the US futures certainly have rallied quite substantially. The S&P is off the 1990 low, and as you can see, we're at 43.51. Copper certainly remains strong. Oil is into support, and gold certainly remains bullish. Aussie and Kiwi are into support, therefore a risk on scenario. And given the fact that, like I said, you do have the situation with regards to China, and it's hawkish, or should we say dovish scenario with regards to weaker inflation, means more QE or potentially more rate cuts as well. And that's obviously equity market supportive. I think that's a summation of European markets. Again, tomorrow, what do we have on the docket? We have the US CPI data. We have Mr. Dudley and Mr. Mester speaking. So that's certainly the more important aspect tomorrow in terms of the markets, and we'll see how the markets react. First of all, obviously, to the Asian situation as well, how the Nikkei and the Chinese markets react as well. And with regards to the Fed Beige Book, I think that was already out a few hours ago. That certainly did point to expansion. So it is going to be very, very interesting. But we have bounced off the Nasdaq. Now I'm going to do a US market analysis video. Hopefully you'll appreciate this European analysis more when I cover the US markets. Okay, I think that's a wrap. Be sure to visit cfds.com for your trading needs, and the educational website www.cfds.education. Good.